Hello traders, Nick Shaheen here looking at Canopy Growth, CGC, pot stock, cannabis stock, active stock. So I took away all the drawings I did. I've done a lot of videos on it. And this is more of a trading environment here. So a couple of things I like about it. Clearly a bad day on Friday the 24th, but that was a bad day for the market, almost down 1%. Believe it or not, we haven't almost down 1%. We haven't had a down 1% since October as far as markets are concerned. Don't know what happened today for pot stocks, but this one's down 8%. But if I'm looking at a daily candle, it doesn't look like that drastic because that's how active these guys are. So, but I do have information. So what do I do if I'm long? What do I do? When do I think there would be an opportunity to catch another whiff higher? So the one thing I'm looking at the extreme drop in earnings was ill-advised, and I did a video on that, and now they've based just above it. So if you ignore that extreme drop on the week of earnings, because it was horrendous, CGC recovered and established a nice base. So this is my first initial reaction. Okay, we've got a good base. We're falling into testing that base. And if I draw a line on those peaks, they're still below this drop. So there's still hope that this drop will hold at the peaks because you've heard it. Resistance becomes forward support. So if you look left on the chart, it's at 2265, 2265. There is one point in time where it matches today's price. In fact, today's price is marked by the red line. If I come here, look at the red line over here. So, and over here, they tried, and then it opened up the floodgate. And over here, I mean, it does not get more perfect than this. They say markets don't have memory. Markets have perfect memory. If you don't know what I'm talking about, I'm going to mark it up. By the way, something might jump into the window here. I'm recording something. I've recorded something else. Okay, so right here and right here. And right here. So this has been a point to watch. What does that mean? Is it a hard line in the sand? Usually not this to the point, but this looks pretty good. So as long as they say above 22-ish, it's a moving target, I'm okay with that. So the buyers are still in charge, meaning the dips are being bought, and as long as they're making upside progress, which is the higher low trend. It's encouraging. So you see it's saying setting higher low, and the point of it is they're attacking a neckline. And once they break through the neckline, then it becomes some sort of a cup and handle. And the target would be about $5 upside, but then there would be some hideous resistance around 28, 29, but then they could fill the gap to the left. That gap. So this is a daily chart. So again, I put an alert. Wake me up when this happens. So I'm not that active, so the daily chart is good enough for me. But somebody who's actively trading it, they have other levels to look at. This one would be one of them, 2190. Maybe this one would be 25. So they could set an alert at 2190. I bet you anything that would be 2170 through 90 would be a place where they would buy the dip. So I'm going to put an alert here. Why not? I'm here. Okay, so that would be a place where I put an alert, and another one would be here, but I'm not going to do that because they keep me busy, and I just don't have that kind of time every day, all day. So, but this gives the levels that one would be watching, and this is that orange that would bring that daily trigger. So the daily trigger would have, in fact, I'm going to represent it right now. I'll draw it right here. Whoops, I guess they won't let me. I'll draw it here, and oh, there we go, and I'll move it. So it's going to do something like this. Get up, choke, and finish the job. So you heard it here, folks. I'm going to do it like this. And the alternative would be somewhere down here. But I'm going to be optimistic. I'm not going to put the alternative scenario. I'm going to just leave the upside scenario. So these are my past drawings. And they've come true. Like they failed here at this green thing. They filled up half and they failed. They brought it to fruition with subsequent breaches of the pattern. So instead of it being happening here, it happened a few days later, or a couple of weeks later. So not a big deal. The point is the level matters, and that's what I like to see, levels. Some people like to trade the trend. I prefer to see the levels. So somebody will draw a line down here and say, okay, the lower high trend is broken. I'm chasing it. Yeah, maybe. But then it might hit my line and fail. So I prefer to miss out on a couple of dollars and catch the bigger run. But that's my personal preference. In other words, I give more weight to the level breach rather than the trend line breach. I hope this makes sense. Speaking of trend lines, I'm going to draw a trend line. We do have, actually this might not be the right tool for it. We have a higher low, lower high, and higher low squeeze. So something's got to give. Usually when the range goes from here to a little pinpoint, this or that happens. You be the judge. Chase the breakout of either. So this is CGC. Who else? ACB. I'm not going to do all of them. It's this is a daily. Oh my gosh, it's so sad. Okay, so there is a moment here that I tried to draw on this orange line. If by any chance they can breach through this orange line, it's a mini inverse head and shoulders that could bring 3. Oh my gosh, 3. Yeah, there's going to be another test at 2.75. As far as heavy resistance if and when this launches. So it's almost $1 stock now. So some people would want to play the options, but at this point it's cheap enough to why not buy the stock to trade it instead of the options, because it's almost just cheap and then time is out of the loop. So but there's talk that these guys might not make it. So, you be the judge on that one. The internals look a little bit better, but boy, that's pretty ugly. So we'll do CRON. Similar to CGC, in other words, they had a nice rally, and now they're testing the neckline zone. Like this point in time, 7.5, 7.4, it's okay. The bulls are still in charge-ish. They're playing with fire. GWPH, I know there were a few alerts the other day. Oh, that reminds me. Back to CGC. Okay. See that little box? I remember drawing that box, and I think the only way I can show it why I drew it is if we delve into shorter time frame. Okay, I saw the one candle on that day, January 14th. And I said, if I had a range that seems important, it would be the edges of that candle. If you see, it had a long tail down here and a long tail up there, and the close kind of in the middle, a doji indecision, and it was right after a breakout. I said, I'm going to draw a box around it, and I did. And here we are in the middle of the box. So confirmation that they are testing the breakout zones, and that white line, if I extend it, is somewhere around here. So the levels make sense. So I can control the CGC chart. I can explain it away. So if I'm long CGC, I'm not bugging out here. I may bug out below that line, and that's why I have a trigger, because then it would leave my box. Then I would start saying, if it was a trade, maybe I want to be out. If it's an investment, I shouldn't even be looking at this. All right. Okay, Nick signing out. If you have any questions, let me know.